So in this video, I'm going to show you how to place a correct stop loss and how to make sure that you avoid stop hands. First of all, let's start by answering the question, what is a stop loss? Well, a stop loss is an order that gets you out of the market or out of the trade if the trade goes against your initial prediction. So for example, let's say you were predicting that the market is going to go up from here. You place your buy trade. But here's the thing, when you are trading, it's not like you are always going to win all your trades. See, to be successful as a trader, you don't have to win all your trades. In fact, no one will ever be able to win all the trades because no one controls the market. But to become a profitable trader, I think what you need to do is just to make sure that your maximum loss is smaller than your average win. That is going to help you a lot if you are trying to become profitable. Just make sure that you have a figure that you know that whatever happens, you won't lose more than that. And make sure that whenever you take profits, your take profits is either equal or above that figure. And let me give you an example. Let's say you are placing your trades, right? And then maybe you have a $1,000 account. So if you tell yourself that each and every trade that I place, I'm going to risk a maximum of $50, I will never risk more than $50 on each and every trade, then that means when you are taking profits, right, just make sure that each and every trade profit that you get is either equal or bigger than $50. If by any chance you want to close it below it hits that $50 mark, just make sure it's too close to that $50 mark so that in a long term, your average win is going to be bigger than your maximum loss. That is going to change the game for you completely. So now let me show you how to place your stop loss correctly. Okay, so let's say you are looking at this chart right here and you are predicting that the market is going to move up because of this strong support zone right here. What you would need to do is you would buy right here, and the next you would need to place your stop loss so that if the market goes against you, if you are not watching or by any reason you are not able to close that trade manually, your trade is automatically going to be cancelled or you are going to get out of that trade. But here's the thing, one of the biggest mistakes that people make is that when they place a trade with a huge lot size, and when it comes to placing a stop loss, they will have to place that stop loss not because of what they think the market will do, but because of the size of the position. So they know that if they put the stop loss where it should be, they end up risking more than they wanted to risk in the first place. So when you place a trade on a zone like this, it's not guaranteed that the zone that you placed your trade that you drew on yourself is the one that the market is going to reverse on. So most of the time on these support zones, the market is just going to wick up or wick down to the downside, and then it's a multiple stop losses for multiple people just because people are putting their stop losses too close to the entry. So to avoid that, what do you need to do? Here's the thing, you need to give your trade some room to breathe, because if you don't do that, you are always going to keep getting stopped out, and then you are likely going to give up. Okay, so what you need to do is look to the left and see if you have some structure that can support your buyers. Like for example, if I have another support zone right here, I know that if the market is to come above and break again this support after breaking the support that I'm placing the trade on, then that means the market have completely reversed at that point, and now I really want to be out of the market. But some people will think that, okay, there is a huge gap here. Yes, there is a huge gap from the entry to the stop loss, but the truth is, if you go to a higher time frame, you are going to find out that this gap is so small. And also you can still risk the same amount. So if I wanted to risk $100 from this point, this entry to this entry, then that means I can also risk $100 from this entry to this stop loss with a very wide stop loss. The only thing that I would need to do is I would need to use a smaller lot size, and I would know that I will be in that trade for a longer period of time. So here's what you need to do. First, you need to know exactly where your stop loss needs to be. Then second, you want to calculate how many pips are there from your entry to your stop loss. You can do this using the crosshair tool, or you can just subtract these two numbers, right? So let's say you have 50 pips from the entry here to the stop loss. The next thing that you want to know exactly is, okay, I have 50 pips. Next, how much money do I want to risk on this trade? So let's say you want to risk $20. I'm just going to use the smallest amount as your risk, right? So let's say you want to risk $20, right? So what you need to do is you need one more thing. The next thing that you need is also you want to know, okay, if I want to risk $20 on a 50 pip move, how many lots am I going to use? And the calculation is simple. You can use a lot of position size calculators, but if you really want to do it manually, here's what you need. You can do. I will leave the formula here, but what you need to do is you just want to divide, right, the amount of money that you need, right? So you take 20 and then you divide on the bottom, right? You want to multiply your number of pips by the pip value, which means it's 50 by 10, which is 500, and then you are going to have 20 over 500, and then if you simplify this, you are going to see that you are going to get 0.04, which is your lot size. So if you put a trade here with a 0.04, and then you put your stop loss right here with 50 pips here, and then you put your stop loss right there, you are going to be risking $20 on that trade. Now, that's exactly what you need to do. First, you need to know exactly where the stop loss needs to be before you place the trade. And then you also, after that, this is where you calculate your lot size. So if you want to get trade ideas and signals, I'll also leave a link in the description so that you can join our WhatsApp channel and we can share those signals out there.